Tonight, that fallout from the collapse of a California bank and the closure of another back east now creating concern across the U.S. economy. President Biden and the federal government are taking steps to restore confidence in the U.S. banking system.
But people from Wall Street to Main Street are asking the same question. How safe is our money? KJ5's Samantha Cortese is tracking developments tonight live in our news center. Sam?
Don't call it a bailout. Instead, the Biden administration says it is assisting those who had more than $250,000 in these collapsed banks. But we want to know, should you be worried?
Look at the line at this First Republic Bank in Brentwood. Following the collapse of Silicon Valley Bank and New York-based Signature Bank, worried customers are afraid their money is no longer safe.
There was news that everybody may not get their deposit back. And so that was the concern. But then the government came out over the weekend and said everything's fine. Once people can get their money and, you're not telling your friend, oh, there's a problem, and he's not telling someone else there's a problem, everything just calms down.
Calm might be the right tone. Should people with their money in smaller banks be pulling their funds out right now?
No, not at all. If you have $250,000 or less, which is the vast majority of Americans, you are covered. In fact, whatever happens to the bank, if it goes under, if it goes through difficulties, you are covered because those are insured deposits.
Consumer reporter David Lazarus explained the problem with both Silicon Valley Bank and Signature Bank is they had a number of clients who had way more than $250,000. When people panicked, mostly over failed investments, and started to pull all their money out, also called a bank run, billions of dollars were vulnerable, leading to the second biggest bank failure in U.S. history. So the Biden administration stepped in and lifted the $250,000 threshold for insured money.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money.
But is that the right move, especially after 2008? Lazarus says we're in the territory of moral hazard.
Banks really don't learn lessons because here we are again facing similar difficulties, and once again, another bailout is happening. And I'm not saying that means you want to let banks or other companies fail, because that's jobs we're talking about, it's families, it's all sorts of things like that. On the other hand, if there are no repercussions for bad decisions or risky behavior, you'll see that again and again and again.
You heard Laz say it, but the Biden administration is not using the bad B word for banking, bailout, but an effort to prevent panic and more bank runs. That's the effort here. As for First Republic Bank, it says it's bolstering its financial health by getting emergency funding from the Federal Reserve and additional funds from JP Morgan Chase. In our news center, Samantha Cortese, back to you.